jumping straight into Cloudflare today. Everyone is watching the price action, but the real story is the AI and security demand driving their 2026 outlook. It's Wednesday, February 11th, 2026, and I mean, if you've glanced at a screen this morning, you know why we're on this topic.
Oh, yeah.
The stock has absolutely surged following the Q4 2025 earnings report. But I want to be really clear, this isn't just a simple revenue beat.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we break this all down, do yourself a favor, subscribe and hit the like button. We're here to simplify your feed, so make sure you're locked in.
So let's set the stage here because, we see earnings beats all the time. Sometimes the stock pops just because the CEO sounds confident.
Right.
But you're saying this report, the Q4 numbers, it changes the entire thesis going forward.
Yeah.
Why? What's so different this time?
It's really two things. It's the sheer scale of the demand they're seeing and the incredible efficiency with which they are meeting it. For a long time, the knock on them was great tech, but can they actually make money? Is the valuation just out of touch?
Yeah, the profitability question.
Exactly. What this report shows is that the flywheel is finally spinning faster than the costs.
Let's unpack that efficiency because that's the core of the bull case right there.
Yeah.
We call it operational leverage, which sounds, incredibly dry.
It does. It sounds like something you put in a spreadsheet to make people fall asleep. But in this case, it's actually their secret sauce.
Okay, so walk me through it. How are they squeezing more profit out of every dollar than everyone else?
So just look at the data. They posted a non-GAAP gross margin of 77%.
77.
Now, for anyone who doesn't stare at sauce balance sheets all day, that is elite. That's the gold standard.
It really is. Most companies with this much hardware can't get anywhere close.
And the reason is how they built their network. They don't buy specialized, expensive boxes for every little thing they do.
This is the critical differentiator, and I think people really gloss over it.
Yeah.
The legacy guys, their architecture is just... it's a mess.
A total mess.
You've got a physical box for your firewall, another box for routing, another one for WAN optimization. It's just cables and different vendors everywhere.
Right. And Cloudflare looked at that and said, no, that's inefficient. They run a single software stack on commodity hardware.
And when we say commodity hardware, we don't mean it's junk. We just mean it's standard off-the-shelf servers.
Exactly. The same stuff anyone can buy. But their code is so optimized that they can run everything. Security, delivery, AI inference on that same basic box.
It's like a handyman who shows up at your house.
Yeah, that's a good one.
Usually you need a plumber, then an electrician, then a carpenter. That's 3 bills, 3 different trucks.
Right.
Cloudflare's like the one person who walks in with one toolbox and can fix the leak, rewire the outlet, and build a shelf.
And this is the key. Because they're already there fixing the leak, the extra cost to rewire the outlet is basically zero.
Precisely. That is the operational leverage. They just push code, no new servers, no new equipment.
And that's how you get that 77% margin, even while expanding like crazy.
And that expansion is physical, too. We need to talk about the scale, because that's the other pillar here. You threw out a number in the intro.
30 billion threats a day.
And where is that happening?
Everywhere. I mean, literally everywhere. The network is now in over 335 cities, more than 125 countries. It's a global mesh.
A huge footprint.
It is. And the capacity is, it's mind-bending, 348 terabits per second.
That's a hard number to even visualize.
I know. So think of it this way. They can serve 95% of the entire world's internet population in under 50 milliseconds.
50 milliseconds. That is faster than the blink of an eye.
No.
Instantaneous.
It is. And that speed matters for AI. We'll get to that. But sticking on security for a sec, you mentioned that threat volume was already jumping way back in Q1 of 25.
Yeah, a year ago, they were blocking 30 billion daily threats. And that was a 27% jump from the quarter before. The curve is exponential.
And that's where their Zero Trust platform comes in. That's the growth engine.
Zero Trust is one of those buzzwords that gets abused, though. Let's simplify it. What is someone actually buying?
Okay, think of old security like a castle. You have a moat, a drawbridge. If you get the key, you're in. You can go anywhere.
The treasury, the kitchen, wherever.
Yep, that's the old corporate network. Zero Trust is like a modern high-security hotel. Your key card for the front door doesn't get you into the penthouse.
You have to verify your identity at every single door, every single time.
Trust no one, verify everything. And with remote work, the castle doesn't even exist anymore. You can't build a moat around a Starbucks.
Right.
So companies are migrating from legacy providers, and the data shows they're seeing over 80% cost reductions when they switch.
That's the number that just jumps off the page, 80%. In this economy, if you can tell a CFO you can secure their network better for 20 cents on the dollar.
You win that contract every time. And they have another killer feature for that sales meeting: unmetered mitigation.
It's huge, especially with these massive botnet attacks we're seeing.
It really is. I mean, attacks are getting 300% larger year over year. Most providers say, we'll protect you, but if it gets too big, we're charging you extra.
It's like an insurance company charging you more while your house is on fire.
Exactly. And Cloudflare says, nope, we'll absorb it, all of it, flat fee.
And that's that operational leverage again. They have so much capacity that 348 TBPs, they could just swallow an attack. It's like trying to flood the ocean with a garden hose.
Great analogy. And that leads to the real moat, the network effect. Because they cover about 20% of the web, they see everything.
It's the Waze effect, right?
Yeah.
The more drivers are on the road, the better it gets for everyone.
That's
one car hits a pothole, every other car knows to avoid it. They're doing that, but for cyber attacks.
Yep. An attack in London instantly teaches their machine learning models how to defend a customer in Tokyo. So every new customer makes the product better for all the old ones.
And that is a very, very difficult moat for a competitor to cross. You just don't have the data.
It's a self-reinforcing loop,
Right.
and the market is finally seeing that loop compounding.
But there is always a but. We're getting a little carried away here.
There's always a but.
Let's break that down even further. I mean, we've painted this perfect picture. But if it were that simple, the stock would just go straight up.
Oh, absolutely not. This thing can be a roller coaster.
So looking at the flip side, what keeps the bears up at night?
Well, the first thing is just the expectations game. Sentiment and volatility. The new sentiment scores, even with this surge, are actually pretty mixed. Kind of neutral.
Which means the market is nervous.
It means the bar is set incredibly high. When a stock is priced for perfection, any little slip-up is punished severely.
So if they miss that 2026 guidance by even a little bit,
The stock could get hammered. You're buying a race car, but you're driving it on an icy road. It can spin out.
right? And speaking of AI, there's this rumor going around about a technical glass ceiling.
Yeah, and I want to stress it's unconfirmed. But the idea is that we might be hitting a point of diminishing returns with the current big language models.
I've heard this. That just adding more data to these massive centralized training clusters isn't making them much smarter.
Exactly. And if that happens, if the whole AI sector cools down, that rising tide lifting this stock could just recede.
Okay, but I'm going to play devil's advocate to your devil's advocate here.
Go for it.
If there is a glass ceiling for centralized AI for the huge models in Virginia, doesn't that make the argument for the edge even stronger?
It could. That's the counterpoint. If you can't make the model bigger, you have to make it faster and closer to the user.
Which is their whole game, inference at the edge.
So a slowdown in big model training could actually accelerate the shift to where they live. But it's still a risk. It adds uncertainty.
Okay, what about competition? They aren't the only shark in the water. We can't ignore the trillion-dollar club.
No way. You have the hyperscalers, AWS, Google Cloud, Azure. These are giants with basically infinite pockets.
And AWS has its own content delivery networks.
They do. And generally, AWS is seen as more expensive, especially their egress fees. But you can never, ever discount Amazon. If they decide to start a price war, they can bleed money for years.
And then there are the specialists, like Zscaler.
A huge competitor. They don't have the same global network reach, but they're fighting for the same budget dollars from the CIO.
And the old guard, the telcos.
Right. They're burdened by old, expensive tech, but they have the contracts. They have the relationships. Convincing a Fortune 500 CIO to fire their telecom provider it's a slow process.
And one more thing. That expansion to 335 cities, that's not cheap.
It's not. They have a smart strategy of partnering with ISPs to use idle capacity, but there's still execution risk. When your network is that big, things break. And if the performance slips, trust evaporates.
So high expectations, a potential AI slowdown, and fierce competition.
Yes.
That's the lowdown on the risks.
Exactly. It's never a slam dunk.
So for the listener, what are the signposts? What should we be watching for the rest of 2026?
A few very specific triggers. First, institutional activity. We saw some significant whale activity, big block buys on February 4th.
Right before earnings?
Just before. That's smart money. The question is, are they still buying at these higher prices? If they are, that's a very bullish sign.
What about physical expansion? Any regions in particular?
Keep an eye on Latin America. This is key.
Why LATAM specifically?
They have a major partnership with TD-SYNNEX covering 64 cities there, and they're offering managed services at a 50% cost savings.
That's a huge underserved market where speed is even more valuable.
Totally. If we see news about record growth in LATAM, that tells you the global thesis is working.
And from a macro perspective,
Sector rotation, we're seeing capital rotate out of pure hardware, the chip makers, and into software and cybersecurity. If that trend holds, this stock gets a tailwind.
and then, of course, the next report card.
Q1 2026 earnings. Early May. The market will be laser-focused on one thing. Did that upbeat 2026 outlook hold firm? If they reiterate or raise, the stock flies.
All right, let's bring it all home. What's the elevator pitch today?
Okay, here's the thesis. You have a company with a physical moat of data centers in now over 335 locations. You have 77% gross margins because of their unique architecture. And you have accelerating demand in a world where the old security model is just dead.
And why now?
This earnings surge signals the market finally believes in the compounding effect of that network. They're waking up to the fact that this isn't just a CDN anymore. It's a distributed supercomputer.
A distributed supercomputer. I like that.
And that leads to my final thought for you. We talk about the cloud like it's this thing floating above us, but physically, it's just a few massive buildings in a cornfield.
Right.
But as AI demands faster processing, as your car needs to make a decision in a millisecond, that centralized cloud might be too slow. The speed of light is a hard limit.
You can't beat physics.
You can't. This company is betting that the future of the internet isn't in those central buildings, but at the edge. In the cell tower, on the street corner, right next to you.
And if they're right.
If they're right, they are the operating system for the next internet. If they're wrong, well, that's a different story. But ask yourself, is the future getting faster or slower?
I think we all know the answer to that one.
I think so too. That's the lowdown for today. Thanks for tuning in to the Easy Money Show.
Keep your eyes on the edge.
Don't forget to subscribe and hit that like button to keep simplifying your feed. We'll catch you on the next one.